What is up, you guys? So Micron just had their earnings yesterday, and a lot of you are kind of freaking out, or you don't really know what this means. Is this a buying opportunity? Is this a selling point? What should I really do? From the analyst perspective, it seems a lot of people are extremely bearish on the Micron earnings, and I'll be straight up with you. I was kind of upset of a couple of things, but at the end of the day, I think 80% of what was on that earnings call was very much expected and pretty much built into the price. And I think that's why we kind of saw like there was a sell-off today, but only a couple of percent here and there. It wasn't this massive jumping off a cliff that people were expecting. And I believe that is mainly because the majority of, like, say, institutional money that's been in the stock for a while is either just waiting on more news, see how the next year is going to be going, or they were just kind of whatever about the earnings report. So like obviously, but the stock price did go down. And so obviously there's some pessimism now. And according to the analysts that I don't know if all of them watched the same or listened to the same earnings call that I did. So apparently a lot of analysts don't like what happened with the stock. So I'm going to kind of go through and kind of give my summary and my explanation of what exactly I thought the earnings was like. So to top it off, I think we all knew going into this that Micron was going to beat in revenue, beat in earnings, yada, yada, yada. Fundamentals are still really strong, at least for ending at the year 2018. Pretty obvious, RAM and NAND demand has been huge. Everybody's been buying tech recently. We're still in a booming economy. So obviously those commodity semiconductors are going to be selling off really well. And so obviously the downside was the guidance. And so the guidance is, it's kind of, I've looked at it in kind of a couple of different spectrums compared to like what I did in this video with like what the big things I was looking for. Realistically, all but one of them were kind of like completely fine. And as a long run, I think management's taking in the right direction. There were a couple of things that I wish that they kind of did, more proactively because, it's like management is optimistic, which is great, but I think they're a little too optimistic. And I'm going to get into that. So start things off, tariffs. Now, tariffs seems to be the big buzzword and why everybody thinks that Micron is going down. And to be honest, I don't really see why everybody's upset about it. So, with the Trump tariffs, they are getting about a 10% chop off of their gross margins, which is, at a face value, you're like, oh man, they're going to lose, out of their revenue that's coming out of China, so about, 52%, they're going to lose 10% of that. So, oh my God, 5% of their net margins are gone. Okay. But if you listen to the earnings call, year to date, the company has actually increased their gross margins from 61% to 70%. So say if you lop off 10% off of what they've just increased, this makes them net down 1% as far as their margins go year over year. And to be in all honesty, I think that was a pretty, easy way to coach through things. Like, yes, obviously people are like, oh, well, you're not as profitable as you were. But, people were buying the stock back in 2016. They didn't expect margins to go up as sharp as they did. Even management brought up how that was remarkable that they were able to get up to a 70% gross margin on their RAM. So the fact that people are freaking out about a 10% after going up 9%, I don't really get it. I understand, yes, less money coming into Micron's pockets, but all in all, I think that was a bit of a wash as far as like how big of a deal that was. Next, going down the list was weak guidance. So weak guidance is mainly projected for especially Q1, possibly bleeding out into Q2. And that was driven around two main points, at least from the CEO and CFO. Main point number one was that there is a significant shortage in CPUs for servers. Now, obviously, if you look at my other videos, this is mainly because of Intel. Intel with, not, capitalizing on any opportunity that they've had in the past year and a half. They had the security issue, and then they failed to make a 7-nanometer NAND, 7-nanometer CPU to compete with AMD's. And they kind of, flopped around on the floor. And, with Intel holding 90% plus of the server space, obviously companies that wanted to, improve their servers and switch to, like, say, a DDR4 from a DDR3, meaning that they would need a whole new set of DRAM, obviously could not do that unless they switched to AMD. Which, interesting side point, that this means that a lot of the, say, servers that people are kind of banking on for AMD to say be grabbing the market share from Intel because of all the security issues. It doesn't seem to happen yet, because if it had happened, then there wouldn't have been that supply shortage for Micron. So that'll be interesting to see. Obviously all those companies were kind of standing still and waiting for the new Intel line. So I wonder what's going to happen with how many of them are actually going to, just say bite the bullet and switch over to AMD, or if they're just going to wait out until the end of 2019 to get the new Intel CPUs. So that'll be interesting, because one of two things happens. You either have a lot of those companies now switch to AMD, and AMD's revenue will go through the roof, which will make the stock price go through the roof. And say if they were able to capitalize on this amount of issue, say that stock price could go up another 10-20% easily. But a lot of that is already built into the stock price, and I think a lot of the server space is now going to be on AMD. So if a lot of them do end up waiting out, and at the end of 2019 it comes that Intel only lost like 5% say of market share, that could bode very bad news for AMD. So that's a bit of a side tangent, but just something that I was kind of thinking about that I would figure I'd share with you guys. So anyways, going back, and so another reason why Q1 and Q2 are going to be a little bit slow is because the company is switching their main development in NAND and SSDs. So they're switching to SATA SSDs, and they're going from the X64 to the X96 form factor. And so that means that these SSDs are going to be extremely fast, and they're going to be, per platter or per semiconductor, they're going to be able to fit a lot more memory onto them. So that'll be great, especially for end users. That just means that we're going to get the next best of the best for SSDs, and they see demand for that going really strong, but they're dumping a lot of money into it, which I'll get into in a second, into really, trying to get those products up to speed and be the first company out of all of their major competitors that have that producing at like say a massive scale. Okay, so those things, again, kind of a wash. Something that else I should go into, just a brief thing that they talked about, was that there were a few select customers that rearranged what their demand for Q1 was going to be, kind of going into, a lot of it was based off of the CPU issue, but there is thought of that, okay, well, what if, say it was NVIDIA, that was one of the customers that either needs more RAM or less RAM because their inventory now needs to be adjusted, and they're expecting maybe a big RAM boost later on, or if they're not expecting to sell out as well. So that's something else to keep in mind, because NVIDIA does buy their GDDR from Micron, or at least they have in the past. So I'm speculating that they're going to be buying it from Micron again. So it'll be interesting to see if the GPU demand, for the new 2000 series is going to be as strong as, say, the 10,000 series was, or if NVIDIA is going to kind of taper off, and then Micron will inherently not sell as much DDR to them. So that's just another point I want to make. So anyways, getting into one of the things that kind of made me upset is the company is spending over $10 billion, plus or minus 5%, they said, in capex. So this includes, the factory that they're building in Virginia. That's going to be, they said that they priced it out to about $2.5 to $3 billion. And then the rest of it is going to be between, some of that's for share buybacks, and others is just, heavily dumping into research and development in order to make them, say, have the tip-top type of chips for the next cycle, pretty much. So all of this capex is going into Micron betting on the next, RAM demand boom. And it's interesting because Samsung and SK Hynix both cut their capex because they see that, okay, in the future, demand's probably going to be slower. And Micron, rather than, conceding to that, they decided to dump more money than their other competitors, proportionally, into capex. So in one way, this is great, because this means that when the next cycle comes through, Micron will already have, the leading technology, and they'll be able to beat, Samsung and SK Hynix to the punch whenever the next cycle starts. However, me personally, I would have rather them used, say, the $10 billion to pay off the remainder of their debt, and then just kind of float it off with no debt and not have to worry about anything. But, management seems to be a little bit more bullish on, the direct trend of things than I am. I look at it a little bit cynically. Like, I do think that, demand will dip. I don't think it's going to dip as much as the market thinks it's going to dip. But, to me, debt is just the biggest, taboo for stocks, especially ones that, go through cycles like this. So that's just my thing. That was really my biggest qualm with the whole earnings report. Like, I'm trying to take a pretty unbiased look at this, and while I don't think it was a terrible decision, I do think paying off debt should have been, more at the top of their priority list. But, what can you do? They already did it. So, jumping off onto the next point is that cloud and AI servers are still growing at a very alarming rate. So, according to the CEO, the demand for these two relatively new industries that haven't been there, during the last two cycles, or were very new in the last cycle and wasn't in 2 cycles ago, is still growing at about 30% a year and expects to for the next 2 years at minimum. To give you a kind of perspective on that, the mobile and computer industries have been growing at about 20%, and that percent is the amount of RAM that they're demanding, and that's because AI, for example, is quoted from the CEO, so that AI servers are requiring 6 times the amount of RAM that a standard server is. So, with these two industries, just in their infancy, in the long term, that's going to kind of open up, and that is probably going to be the biggest demand space for RAM. So that's definitely going to be a really big portion to how the RAM industry is going, and those are probably going to be their main customers. So places like Amazon, Microsoft, Alibaba, all those players, probably going to be the main customers moving forward for at least in the next cycle for all the RAM companies. So that'll be something interesting to see how that plays out and how booming of an industry that really is once it kind of takes off. Again, it's roughly in its infancy right now, so we're going to see, is this something that, is going to kind of dissipate over the next few years? I personally don't think so, but, who knows? And so I think that could be a really big growth driver in the future. Another thing that I want to touch on is their share buyback. So they said a couple of things that made me feel happy and alarmed me regarding their share buyback. So, as they announced back in about May, they announced a $10 billion share buyback, and they had said that as of this quarter, they have already been buying back shares in small increments. I think they already said that they bought back $1.5 billion, or they already cleared $1.5 billion, something like that, for the amount of shares they're buying back, because both the CEO and the CFO both said that they believe that their shares are extremely cheap, and, what they did in previous to sell shares in order to pay off debt quickly kind of goes into the fact that I think management does understand that eventually the music's going to stop and we're going to lose a lot of revenue or free cash flow. So we need to get down our debt really quickly. And again, while I think they should have just paid it all off, if you go back a year ago, they had $20 billion in debt, and now they only have $5 billion. And they also have the most amount of cash on hand that they've had ever. I think, management is kind of being pretty proactive with that. And they do think that their shares are cheap. However, they said that they're going to be progressing at it. And that's kind of the thing that alarmed me. So they said that they are going to take an additional amount of free cash flow and put that for opportunistic buying opportunities. So what that kind of means to me is that they expect a lot of volatility in Micron over the next couple of quarters, even over the next couple of years maybe, that they're going to see great buying opportunities, and they've already pre-cleared a few $1 billion to just immediately buy back shares that they think became too cheap. Now, that kind of relates to the investors watching this, that you can expect Micron, over, the next few quarters to probably drop in price. And that's kind of go into my synopsis right now. So, all in all, I think this quarter, while it was a little disappointing for certain things, I do think that management is still running the company properly, and I do think that fundamentals are still looking good. I do wish that one of the investors had asked, or anybody on the conference call had asked about, further in-depth with all the liabilities and lawsuits with China. Either obviously I didn't get the memo, and I can't find it online, or no one thinks that's a big issue anymore. So who knows? Other than that, all of my questions were pretty much answered. And I think the management is going in the right direction with Micron. That being said, you have two types of investors that are in Micron right now. And you have, a swing trader or someone that's looking for massive growth very quickly. And then you have the people that are like really bullish on the industry and looking for the long term. And I have two different opinions for these two individuals. If you are a swing trader, or if you are someone that's expecting to, say, buy and sell your Micron shares anytime less than, say, 1 to 2 years from now, odds are Micron is not going back up to $60+ in the next year. It's very well possible. However, the company is only going to be marginally better, if at all better, than it was in the past, than last year, because last year was an extremely strong year. And I would be surprised to see the stock price actually hit, like what some people are saying, like the $100, price target. I do not think that that's happening. Could be completely wrong, but I don't think that's happening, at least not in this cycle. So, take that with a grain of salt. I don't know, you can either cut your losses or you can short it, you can do whatever you want. I do think that there's going to be some more downside to Micron shares in the short term because of, the Q1, Q2 weakness. That being said, the CEO did say that demand for DRAM was actually very strong and continued to be strong, and there was no faltering in it like a lot of the market had already predicted. So who knows? It could just be smooth sailing next year. However, there's definitely more uncertainty, and people weren't as blown away from this earnings as they needed to be in order for their stock price to kind of shoot straight up. So I definitely think that this probably isn't going to be as easy money as a lot of people thought it was, looking back at this a couple months ago when it was going up, 40% a month. For people that are kind of in my boat, and you're a very long-term investor, and you're thinking, and you're looking at, say, okay, looking at this space, 10 years from now, who's going to be the key player? What's going to be going on? How much is this going to be worth? Based off of this, I think Micron is going to definitely be the key RAM producer in the world. And that's mainly because, as these chips become more and more difficult to create and develop, a lot of other companies right now have kind of backed up on their capex and their research and development because they know that once the cycle starts to end, they're going to lose a lot of cash flow, and they're just going to kind of stand out of it and wait for it to rebound before they start dumping money into it again. Micron is not looking at that at all, and they are just kind of going on full throttle, and they want to get the best tech fastest and beat all other competitors. So, through the next cycle, I definitely think that Micron, will be able to, say, get 50, 60% of the RAM market share. And, they might even be able to, possibly for a short period of time, they might even edge out Samsung and get the majority shares, say if they were to hit over 50%. And I definitely think that they're being more proactive than Samsung is. That being said, I do definitely think that there is going to be somewhat of a downturn in the RAM space. And if you're long on Micron, you should really take that into consideration. So definitely, you need to understand that Micron, even though it's both secular and cyclical, because it's a semiconductor and a commodity-based semiconductor, it's going to have probably a much higher high in the future than it has in this past year because demand and their margins are only going to be going up from here on out, and the amount of competition is going down, so a lot of that is going to be going straight to them. I definitely expect that there are going to be better buying opportunities in the next year, next 2 years, or whatever. Especially if we, say, have the downturn in the economy, which I personally do think is due. I do think in the next few years or so, I'm not going to even try to put a time projection on that, but we're just due for one. We're eventually due for one. It'll go down. It'll probably come back up. That's just the way things goes. And so I definitely think that is going to be the best buying opportunity if you were very long Micron, to keep picking up shares. So as of right now, I'm not buying any more shares. I do think if it continues to drop, I think if it hits about $30, $35 a share, I'll probably start buying more again. My current, I started buying back when it was sub 30, and if it gets to only being that much above 30, I'll probably start buying again because I am very bullish on Micron. I do think if you're going to be continue to buying into the stock price, I definitely would say go slowly, at least for now. There's a chance that it could run up, in a month because, phone demand from Samsung and Apple are going through the roof. So everybody thinks that all devices are going to be going through the roof. So everybody just continues to buy and buy and buy. Say Intel pops out their CPU faster than expected, and then server demand goes through the roof faster than everybody else thinks. Those are all definitely possibilities, but I do think that there's going to be a downturn, in the near future for Micron. That being said, I don't think the downturn is going to be that much of a decline. I think that between, the $10 billion share buyback and the amount of pessimism that's already priced into the stock, I would be shocked, based on how Micron has developed as a company and compared to look at their balance sheet and then what their market cap is. I would kind of be surprised if the share price did more than, say, a 20 to 30% decline from right now. And I definitely think that would be about the bottom, because if you look at, say, if you take their cash flow and you cut it down by half, they are still reasonably cheap compared to other semiconductors. And I definitely think that with their share price already plummeting, say 20 to 30% off of their high, with, say, the free cash flow only going up and they just had their most profitable year, I definitely think a lot of that is already priced in. So who knows? It could go back to $10 a share. I personally don't think it will, especially with how much more revenue the company makes and how many more products are on the market that use their semiconductors. I definitely think that there is going to be I don't think the bottom's that far away. I'll say that. Like, yes, it could still drop a while. And, you know, if you have a weak stomach, probably don't invest in the semiconductor space at all anyways. But I definitely think that in the long term, Micron is still an amazing company. And I think that management will steer through, you know, anything that is about to come. And I think that they put themselves in a position that they will not go bankrupt, say, if a recession happens, which is, in my opinion, the #1 thing to always look for when investing in a company, especially in tech. So that's kind of my, you know, overall opinion on where I see the company going right now. Obviously, I would have liked it to, you know, continue to go up and say that, okay, demand's stronger than we expected in 2019, or is going to be stronger than we expected in 2019. Whoop-de-doo. But, you know, that's not what happened. And again, I guess I'm not really bullish or bearish on the company in the long term. I guess if I would say right now for the short term, I would guess right now I'm slightly bearish, but not enough to say sell or not enough to lower my position. You know, this is something that I potentially see as being a multi-bagger, you know, 3 to 5 years from now. And if I'm wrong and say that 3 to 5 bagger comes within a year to 2 years, I don't want to be out of the stock. I'm not aggressively buying it right now, but I don't think anything was said that makes me want to be out of the stock right now. So that's just kind of my very long-winded explanation of what happened with the last earnings report, and I'll be interested to see what you guys see. Now, I am trying to be extremely, you know, unbiased with this. You know, like, I do have some money in it. It's less than 15% of my portfolio. Like, okay, if it goes down 50%, oh well, I've lost 7%. If you invest in tech, expect that to happen a lot. You know, so I think I'm approaching this in a pretty level-headed way. You know, things could have been better, but they could have been significantly worse. And so I'm just still kind of holding on. I definitely think things will be good, but, you know, I'll stop talking now. So, so I hope you guys liked the video. Let me guys know what you think in the comments. What was your opinion on the earnings?